Welcome back. Now, the World Bank expects Sub-Saharan Africa to grow at 3% this year, down from 3.4% projected previously. This largely as the effects of Sudan's civil war weighs on the outlook, while climate change also serves as a significant risk to forecast. On the bright side, the 3% growth expected in 2024 is up a notch from last year's 2.4%. The World Bank's chief economist for the Africa region, Andrew Dabalen, joins us with a closer analysis. So thank you so much for your time, Andrew. Let's actually start off with the growth that we have seen between 2024 and 2023. Talk to me about those drivers.
Thank you so much, Inachi, for being with you. So we expect African growth to recover modestly from 2.4% in 2023 to about 3% in 2024. And the focus is for it to grow about 4% in the next couple of years. This is driven primarily by the progress that the region has made on inflation, which is making private consumption recover and a bit of investment as well.
Well, I mean, just even with that 3% growth, though, we did have a downward forecast from April. Talk to me about the extent to which the war in Sudan is impacting growth here, and actually what it's looking like for the short to medium term.
Excellent. So the focus we had in April was for the region to grow at about 3.6%. And the war in Sudan, which has basically brought the economy of Sudan to a halt, led to a lot of destruction. Factories are shut. Nobody's going to the farms. People are displaced, so they can't engage in productivity. That has shed off 0.5% of growth in Africa's GDP. So this is not a powerhouse like the ones, a powerhouse like South Africa or even Nigeria. It's among the top 6, but it's not anything close to what, the contribution of, say, South Africa and Nigeria. And yet it was able to shave off 0.5%. That meant that Sudan's economy actually shrunk by 12% this year, on top of what the decline it experienced last year when the war started.
Well, I mean, as much as, yes, there is growth, there is still growth, 3% forecast for this year and much more than the 2.4% in 2023. But really, economic growth remains stunted in Sub-Saharan Africa. Talk to me about how you're looking at this, and really also just that it can't filter through to, a better social impact, because the growth is just on a very low gear.
That's right. So the projection is that it will grow at 3.3% from 2.4, which was sort of like a depressing year in 2023. But I think what we say in the report is that this progress is in slow gear. It's at low speed. Yeah. And there are 4 reasons why. One is the underperformance of the big, economic powerhouses such as South Africa and Nigeria, which are growing below their potential. There is, of course, these staggering debt service costs that are taking up 35% of revenues on average from these countries, which leads them to actually have these very painful trade-offs on whether to spend on investments for growth, such as education, energy, health. And then, of course, conflict plus extreme weather. So Southern Africa, for example, Zambia, Malawi, Zimbabwe, have been experiencing a 1 in a 40-year drought, which has decreased economic activity. And then finally, even though investments are recovering, they are still depressed at that level. And so those are the reasons why economic growth has kind of been dragged down. Yeah. And so it's not enough. It's not sufficient to actually reduce poverty and inequality.
Yeah, insufficient economic growth, but also you talk about servicing debt, on the government side. Would you say that we actually don't have a lot of fiscal muscle at this point in Sub-Saharan Africa?
Yes, that's correct. So Sub-Saharan African countries have actually, on the positive side, they've actually made a lot of progress in trying to align in revenues and spending. So if you just look at revenues and spending, they're actually almost arriving at a balanced budget. However, when then you add interest payments on top of that, then you see that, in fact, the fiscal deficits haven't come down nearly as fast as primary deficits have come down. And that's been primarily because of this expensive, very expensive interest payments to external creditors. And so there's very little room to really spend on much badly needed investments in education, in health, in energy, in transport, in agriculture, in order to be able to transform the economies of the region.
We're going to go into education right now, but also just really another important thing is climate change. How closely is the World Bank watching the impact of climate change on the economic metrics of Sub-Saharan Africa?
We watch it quite a lot, and that's the reason is because there are three extreme events that are quite common in Africa. One is floods, the other one is storms, and then there are droughts. Now, at any one point in any given year, one part of Africa is experiencing one of these three extreme events. So this year it is drought in Southern Africa and floods in West Africa. Last year or 2 years ago, it was droughts in East Africa and floods in Southern Africa, and so on, and so it goes, right? So what we're showing is that actually the floods and the storms, while they're more frequent, are not nearly as damaging. The most damaging of these extreme events is droughts. And the reason why that's the case is because it has huge spillover effects to the macroeconomy. So if you're having a drought, say, as an example of a country like Zambia, and you're relying on hydropower, then if the water levels go down from the river or the lake, your power is interrupted, and so your factories are not open. Your mines are not open or functioning. Job losses become common. You can't start new businesses, and even the ones that are operating in suboptimally and below capacity. And then you can't produce enough food, and the cost of food goes up, and so on and so on. So there's massive spillovers, and it can easily knock off 2 or so percentage points of a country's economy. Growth rates.
Yeah. Just also one of the things that can make or break an economy is the education system. Talk to us about what needs to change in the African education system to support sustainable economic growth that really has an impact on alleviating poverty.
So 3 things need to change. One is that African countries have made a lot of progress in enrollment and access. So enrollment rates are, for primary especially, almost universal. There is a lot of progress also made in secondary education enrollments, and even primary completion has actually made a lot of strides. Now, the problem is threefold. One is that foundational learning outcomes are very low. So while there is universal access, there is not a universal learning. And so I think one of the big paradigm shifts that we're proposing in the report is to ensure that there is this shift from focusing on universal access to focusing on universal access and universal learning. So that's important, studying this right from the early childhood all the way to primary and basic education, and be able to make sure that there is proficiency in learning in mathematics, in reading, and of course, socio-emotional skills. That's one. The second is to ensure that, in fact, the young people who are in universities or TV education get the skills that they need in order to be able to be competitive in a globalized and changing and evolving economy. And the final thing is to make sure that the spending is more when it is necessary, but more importantly, more efficient in order to be able to lead to better outcomes.
All right. Well, thank you so much for your time and giving us your insights on Africa's Pulse there, Andrew. That was the World Bank's chief economist for the Africa region, Andrew Dabalen.